Thank you very much, David. Good afternoon and welcome to everyone to this Parkwell webinar on Are You Ready for ESG? Before we get started, I've got 3 bits of admin. First of all, there's going to be a panel session later on, and if you want to submit any questions that you have regarding ESG, please use the Q&A functionality within Zoom. At the middle of your screen at the bottom, there is a Q&A button. You can simply click that and type your question, and we'll attempt to answer those questions that we get. But of course, we may run out of time, so we'll do our best on that side. The second thing is that all the slides from tonight's presenters are going to be available through the Compeer website over the course of the next few days. So if there's anything you miss, please feel free to visit the Compeer website to get that. And also, this session is being recorded, and the recording will also be available through the website. So, can I have the first slide, please? I'd also like to take this opportunity to thank our sponsors for this afternoon's session, which is Objectway. Can I have the next slide, please? So, for those of you who aren't familiar with Parkwell, we're a mid-tier firm of consultants based in the City of London. We have a speciality in financial services and in particular the wealth management sector. You will probably know our sister company Compeer, who provide benchmarking data and services to the wealth management industry. We have a team of management consultants who all have significant experience within the wealth management sector, helping them to deliver change projects, both to improve business performance and also to address regulatory changes that crop up. Indeed, over the last, say, 15 or so years, we've seen the amount of regulatory change and indeed the regulatory burden on the wealth management industry increase dramatically. Can I have the next slide, please? So just to give you a flavour of our clients, as you can see, we've got a very good coverage of both financial services and the wealth management industry here. Can I have the next slide, please? So our agenda for this afternoon is, obviously I'm doing this welcome session. We're going to have then Tim Fazam from PIMFA, who's going to tell us about PIMFA's view on ESG. We're then going to have my colleague Ian White, who's going to cover 2 topics. First of all, we've had Compeer conduct a piece of research to gauge the state of readiness of the industry for ESG, and he's going to present the results of that survey. And he's then going to talk about how to construct and manage a program to respond and deliver ESG readiness. We're then going to have Tarek Khan from Objectway, who's going to cover off how you can exploit technology for ESG. And we'll then have our panel discussion and we'll introduce the panelists at that point in time, and then I'll wrap up. Can I have the next slide, please? So just to set the scene around what is ESG? Well, I think really it is what it says on the tin. It's the non-financial considerations that we take when designing investment strategies. And more recently, it's about the ability to measure the impact of those investment decisions. Now, of course, we've been able to take these considerations into account for some time using things like investment mandates, specialist funds, and the like. But historically, I think that the focus of this was often what I would term ethical type things. So things like arms manufacture, exploitation of your workforce, and things like that. But over the recent time, the focus has shifted very dramatically towards environmental issues. And of course, that's due to the huge coverage that gets through media, and particularly social media, and indeed, particular well-known individuals such as Greta Thunberg, Bill Gates et al., raising the profile of environmental issues. In addition, we now have some regulatory requirements coming our way. So the EU are introducing a set of regulatory requirements next month. However, of course, as a result of Brexit, we're not obliged to implement those in the UK, and indeed the FCA has currently chosen not to do so. So you might say, why are we interested here in the UK? Well, one of the questions we asked as part of our survey was whether or not firms thought that there was a commercial opportunity through ESG, and all of the firms responded yes to that. So while we haven't got to do it from a regulatory perspective just yet, there is a feeling within the industry that if you don't do it, you may get left behind and lose market share. So I think that's a reasonable introduction to this. And I'm now going to hand over to Tim Fazan from PIMFA, who's now going to talk to us about PIMFA's perspective on ESG. Over to you, Tim.
Thank you. Thank you very much, Jason, and delighted to be here this afternoon. As Jason says, I'm Tim Fassam. I'm the Director of Government Relations and Policy at PIMFA, the Personal Investment Management and Financial Advice Association. We are the trade association that represents the wealth management industry as well as the financial advice industry. And we've been significantly engaged with ESG investing, both in terms of our members and also the regulatory and political debate at global, European and UK level. And what I hope to do today is a bit of an overview of where we are and where we've got to, how we've got there, a sense of where the government is and what you might see going forward, and where we see the opportunity for the sector within ESG, what the sector can do, what the government can do, what we can all do to ensure that this is an opportunity we grasp and that the industry both does and is seen to be contributing to this important goal. Could I have the first slide of my presentation, please? And the second. Thank you. So in terms of this is a climate change, an issue that rather obviously can only be dealt with truly at a global level. And so the international context is incredibly important. And this has particularly driven by the UN and by the EU. And this really dates back, the modern ESG rules, to 2015, the UN 2030 Agenda, Sustainable Development Goals, and the Paris Climate Agreement that came out of it, which included really the first significant international commitment to align financial flows with a pathway towards low carbon and climate resilient development. And the Financial Stability Board established their task force on climate related disclosures, which looked at governance, strategy, risk management, and metrics and targets from a first perspective. Now, this work really got picked up by the EU and became a significant part of their financial services regulatory agenda and their wider industrial strategy, including the European Green Deal, which aimed to make Europe the first climate neutral continent by 2050. European Green Investment Plan, which looked to mobilise $1 trillion of sustainable investments. And then for us today, the most important, which is Sustainable Finance Strategy and Action Plan, that started the process to develop the regulations that are now coming into place. And these looked at the CFDR, the new transparency disclosure requirements, the now well-known work on taxonomy regulation to agree consistent language, and then the low carbon benchmark regulations. Now, could I have my next slide, please? Brexit means that while historically we may have, and certainly at the earliest stage of development, we'd have expected the UK to follow this model exactly. And we'll talk more about where the UK may move this, but the UK's gone through its own journey here, being the first country to introduce legally binding national legislation to tackle climate change, and then arguably most importantly to get set in legislation the net zero target by 2050, which is going to mean significant changes to the way that we invest. And in 2019, government set out their green finance strategy, which I think is still sets out the strategy and the principles for this government's approach, which is how do you green finance? How do you ensure that financial risks of climate change are taken into account with mainstream financial decision making? How do you finance green? How do you access that investment for low carbon technologies? And then, and I think this is critical for our discussion, how do you capture the opportunity? How do you make the UK a leading global centre for green finance? Could I have my next slide, please? Now, post-Brexit, the government has obviously no requirement at the moment to align with what the EU is doing, but it is still committed to international standards. And so in terms of their general principles of regulation, the government has said that they will maintain international norms and they will continue to push the UK to be the world's preeminent financial centre. They will, they believe that the UK is uniquely positioned to provide sustainable finance services with the largest cluster of financial professional services firms, deep capital pools, and a wide investor base. And then the approach to the approach they take to financial services will be one of doing what they believe is right for the UK and not aligning with the EU simply to seek equivalence. And they've demonstrated this by explicitly deciding not to onshore the SFDR and the UK taxonomy, as Jason mentioned. And in 2020, the Chancellor set out new proposals to support financial flows and green finance that will lead into COP26, which will now take place at the end of this year. Could I have my next slide, please? So in terms of the firm commitments they have made, the UK has said they'll be the first company to make the Task Force on Climate-related Financial Disclosure fully mandatory, and that will take place by 2025, going beyond the comply or explain approach that they've recommended. And the UK has also said that it will implement its own green taxonomy to help define what activities are considered environmentally sustainable. This will be based on the scientific metrics from the EU taxonomy, but there will be a UK Green Technical Advisory Group that will look at all of these metrics to ensure they're right for the UK market. So we can't assume that the EU approach will be taken throughout. And then the UK has joined the International Platform on Sustainable Finance in order to support and benefit the development of a common international standard on the various taxonomies that are developing around the world, not just within the EU. Could I have the next slide, please? So the opportunity that this comes from this sector is really heart driven by customers. And we're seeing customers increasingly interested in aligning their investments with their personal values, and there is increasingly a competitive advantage to getting this right. It's no longer niche and it no longer means slow returns, although there is a question over whether you can really get the best of both worlds. Increasingly, innovation means you can, and especially if you look over the long term, your environmentally sustainable investments are likely to be your best performing investments. The short term is, of course, much more complex. And as Jason pointed out himself, the vast majority of focus at the moment is on climate. He made many points. One I might add to is that climate is more inherently measurable because carbon is measurable. So it's easier to create clear regulation, whereas sustainable and governance involve more value judgments. And that's where the real opportunity is to understand your customers' values and be able to align with them. In terms of what customers need, we need wide availability of products and accessibility, and we need to make sure the wider regulatory environment is sufficiently flexible that we can have innovation in this sector. And there is a real opportunity for our sector to be involved in this wider framework that's underpinning the whole of the low carbon economy to ensure that retail investors can play their part in financing environmental change and movement to a more sustainable economy. Can I have my next slide, please? What can we do as a sector? Most importantly, we need to build trust, which means we need to develop and adopt measurable standards to report investment outcomes. We need to be consistent in terms of fund names, objectives, investment strategies. These are not always well aligned across sector. We need to be transparent, clear, consistent in terminology and approach, and we need to ensure we're avoiding greenwashing or, as there's been some criticisms today about not living up to views on ethnic diversity and gender diversity. Customers at their heart need to be able to trust ESG claims, and that means we need consistent methodologies in terms of the data that we provide. Can I have, I think it's my final slide. What do we need from the government? Regulators, well, the FCA will be setting out their guiding principles for ESG sustainable product and disclosure, and this will be absolutely critical to ensuring retail investors can participate fully in ESG investment. We need real clarity on the extent to which the UK will be diverging from the EU objectives, and whether they will be continuing to amend and review alongside the EU and other international forums. We need proportionality, and this is particularly important for ensuring smaller firms can continue to be a part of this. And then we want the UK really to be showing global leadership, utilising the G7, the Financial Stability Board and other global forums to drive an international consensus, because the patchwork of regulatory approach will make it increasingly complex and difficult for UK customers to be involved. Thanks very much for listening. I hope that was a helpful overview. And Jason, over to you.
Thank you very much, Tim. I think that was very informative. As per our agenda, our next speaker is Ian, who's going to talk to us, first of all, about the Compeer survey results, and then about how to deliver ESG compliance. Ian, over to you.
Thank you very much, Jason. Very pleased to be here. And as Jason said, I'm going to be talking a little bit about the survey results that we've received, and also what an ESG project might look like. I'd like to say thanks as well to Tim. Very interesting slides. And hopefully a lot of that information will pull through in the survey results that I'm about to present. If you could show the first slide, please. So just to introduce myself very briefly, I've been a consultant with Parkwell for over 20 years now, specialising in financial services, and within that wealth management, delivered a wide range of projects and programmes across wealth management, including regulatory change. But currently I am actually running an ESG programme for a global wealth management firm, so hopefully can bring through some experience on the ground of what's happening in the industry at the current time. Next slide, please. So we'll kick off with these results from the Compeer survey, and this is hot off the press. This survey happened during February, and it's covered, I think, 150 billion worth of assets under management across the total of the firms that were surveyed, which is about a sixth of the total wealth management market in the UK. So hopefully a very, very representative sample of what is happening in the real world, and what firms' views, objectives and aspirations are for ESG through 2021. So kick off on this slide. What do your clients think about ESG? How can you find out? You need to survey your clients. Only 57% have done that so far, although those who said no are planning to do that in 2021. I think that's essential from my view. If you don't understand what your clients are expecting from your ESG approach and your ESG products, how can you deliver and how can you be successful? So if anyone in the audience haven't planned to do that, I would absolutely recommend that. The second graph there, however, is perhaps one of the big challenges here. 80% of firms said only 20% or fewer of their clients would be happy to prioritize ESG concerns over an overall investment position. So the challenge here for firms, and I think Tim alluded to this, but it's perhaps not insurmountable, but it isn't easy. How can you still provide high quality performance for your clients while delivering what they expect to see from an ESG perspective. So an interesting challenge there, and there's ways and means to do that, but it certainly isn't straightforward. Thank you. Next slide, please. So that investment point of view is borne out, I think, by this slide, that over 50%, close to 60% believe there's going to be a severe or high impact on firms' investment strategy. The one surprise there, I think, is the 14% who believe there's no impact on their investment strategy. I'm not sure how you can how you can reconcile the fact that ESG is now a key consideration whilst ignoring it from your investment perspective. So I'd certainly agree with the severe and high categories there. It will be an impact, and you need to plan for that impact. Do you see ESG as a commercial opportunity? 100% say yes. So really the challenge there is, if it is a commercial opportunity, and I agree with that, by the way, how do you then differentiate yourself from all your competitors who also see it as a commercial opportunity? Really important you understand what you believe makes your firm different from an ESG perspective, what means that you can meet clients and prospective clients' requirements better than your peer group firms and your competitors, and ensure that that pulls through into your strategy for delivery through 2021. Thank you. Next slide. Staff readiness. If your staff are not fully in the loop, if they don't understand the ESG landscape, the ESG perspectives, the ESG information that's now available from an investment perspective, from a client reporting perspective, then if your staff don't understand that, how can you expect your clients to understand that? So it's really important, I think, that your staff do understand it. I was surprised that nearly 75% of firms believed their staff understood it extremely well or very well. I think that's a little bit optimistic. I think unless you are an ESG expert, unless that's 100% of your day job, there is so much information out there, so much complexity that's coming through more and more quickly, that anyone setting out that they're an expert is perhaps being optimistic. You'll see that 100% have an internal ESG governance structure or committee or a nominated person. I think that's essential, certainly. But I think the ESG awareness training for staff, although certain people said no, it's really important that that is introduced in 2021. If this is a key part of your business and a key part of your proposal to clients, you need to ensure that training is there for your staff, and you need to basically, that needs to be an ongoing training requirement now. That's a necessity, I believe, going forward, alongside compliance training, alongside investment training. Really important. Thank you. Next slide, please. Again, do you have a stated ESG policy? Again, I'd pull this through into this being an important and integral part of your business going forward now. If you don't have a policy and you don't understand what your strategic approach is and how that pulls through into all the areas of your business, it will make it difficult to have a joined up approach across the entirety of your business model. So again, half of those who said no, so another 15% say they will be creating a policy in 2021. I think everyone needs to have a stated ESG policy. It is in the EU regulation a regulatory requirement. We know that's not being mapped across to the FCA, but nevertheless, I think that's really important from an overall governance perspective. Do you report metrics? 43% do that already. The remainder of those will all start to do that in 2021. Again, I think that's essential, really, to be able to demonstrate to your clients what your beliefs are, what your approach is, what you can really explain to clients how their investments are making a difference, or what the impact will be. But it's important you understand what those metrics are, and that your staff understand what they are, so they can report through and explain those to the clients. And it's also important you understand how those metrics will change with investment decisions, with market movements. How will those metrics change, and what does that mean to the client? Do you offer a specific investment strategy? I think there's the vast majority do, and those who don't at the moment intend to introduce that in 2021. Again, I think that's going to be essential for businesses, for wealth management firms going forward, because otherwise you will be missing out on client requirements. Thank you. Next slide, please. So that's a very brief recap of what the situation is in the marketplace, in the wealth management sector. And I think that pulls me through to this slide, which is really how are you going to ensure that within your firm you understand what you intend to deliver to ensure that you can keep up and maybe become a leader across the sector. The key to that is strategic goals. Where do you want to be this time next year in 2022? Once you've decided that, then you start digging down into how you deliver that. What changes to your systems need to happen? What data do you need to get from your providers, from your data vendors? Possibly long lead times there, in particular for system changes, for reporting changes, for example. We talked about investment models. How do you reconcile ESG-friendly investments with performance challenges? How do you ensure that you're still meeting your clients' risk requirements and investment objectives? Again, needs to be formally, these are big questions that need to be addressed at a high level. What are you telling your clients? What are you telling your staff internally? Needs to be joined up, needs to be positive, needs to be a strong marketing message, because every other firm will be saying this as well. How do you meet your client investment objectives and your client suitability requirements? Essential, again, from a regulatory point of view, the FCA don't have any specific requirements yet. They will be coming. You need to be sure that you can get ahead of the game for those areas. Thank you. Next slide, please. I think for ESG, this is a big project or program for most firms. It will cover wide-ranging areas of your business, from investment to marketing to compliance to operations to IT. When you have projects and potentially programs that cover or that are that wide-ranging, really important that high-level sponsorship is there, who can make decisions, who can drive through change if required. And you can only do that by understanding exactly what your success criteria are and how you can measure against those, and which will in turn feed into a business case that stands up and will help you identify what budget you require to deliver that. Easy to set that commitment in place and to set that up, but how do you continue to deliver against that? Really important to have clear governance, as you would for any project of this size, but don't think that because this is perhaps that there are lots of different aspects to ESG, you still need a clear governance structure. You still need all of the correct level of governance to enable risks and issues to be tracked, decisions to be taken, communications to be signed off and delivered in a timely manner. Without those, your project will fail. Thank you. Next slide, please. Resourcing is always a challenge, in particular for specialist areas such as ESG that get spun up across the industry as a whole, meaning that specialist resources become scarce, they're snapped up, costs of those resources can increase. So really you're looking to identify as soon as possible what resources you think you require, identify them. They may be internal, in which case you might need to backfill. They might be external. Really important to understand, quantify and deliver against the resource requirements for your program. Thank you. Next slide, please. So just very briefly, and I know Jason introduced Parkwell at the start of the webinar, I'm just going to recap. Parkwell are very happy to help firms at any level with projects of this nature, and in particular with ESG. As I said, we do have experience of the ESG landscape, And that help could be from a very high level impact assessment to understand where perhaps you need or where you can best address and deliver change, through to assisting with implementation. We can offer a full project and program management service, or we can mentor and provide oversight and guidance for your own internal project teams. Thank you. Next slide. And just to wrap up, this is my final slide, but I'd recap that Parkwell do have wide and deep knowledge and experience of the wealth management sector. We understand how to deliver successful change and what the specific challenges are for the sector. We can provide methodologies and resources that are tried and tested in the wealth management and the wider financial services arena, and provide you the assurance that we can deliver some quality work and to help you deliver successful change, which is the real end goal at the end of the day. Thank you very much. I'll hand you back to Jason.
Thank you very much, Ian. That's a really interesting presentation. And I think that the Compeer survey shows that some firms still have some way to go around ESG. Okay, so our next speaker is Tariq Khan from Objectway, who is going to speak about how you can apply technology to ESG. Tariq, over to you.
Thanks, Jason. Good afternoon, everyone. It's a real pleasure to be here with you all today. And I'm particularly excited because I'm going to share some thoughts on two subjects which are close to my heart, ESG and digital change. Both of these are hot topics in wealth management at the moment. And I'll share some statistics with you, which I think you'll find interesting. First one on digital change. And this comes from C-level research, which I was involved with approximately 25 firms. And it showed that 7 out of 10 firms were looking to review their IT. And at least half of these were expecting to change IT in the coming 12 to 24 months. Now, that's a big number and a lot of change. Having spoken to these firms in the recent weeks, this pace of change is actually accelerated because of COVID and also because of ESG. At the same time, ESG is front of mind for the majority of firms in our sector, and it's extremely important to their clients. In fact, 2/3 of clients have stated that ESG is either very important or their number one priority. And firms will choose and lead wealth managers according to their ESG offering and how it's delivered. And delivery is where digital comes in as an enabler. And can I have my first slide, please? The title slide, please. Thanks. So the objective of my presentation today is to show how digital change can offer a competitive edge to clients in terms of their ESG offering. It will improve the client experience. It will also improve risk management. I've also got some next steps for us all to action on later. Next slide, please. I'll just give you a few seconds to go through the agenda. Next slide, please. Thanks. Okay, let's start with a bit about Objectway. So for those of you who don't know, Objectway is a global fintech firm with 30 years of local presence. So Objectway is proud to partner with UK wealth managers and provides them with a fully integrated front to back office solution. Now, this includes a digital portal, a portfolio management system, and risk analytics. And along with our clients, ESG is a high priority for Objectway, and this is reflected in the product functionality. And I'll touch on this as we go on. Next slide, please. Okay, so let's first have a look at the main drivers of ESG integration. This is taken from research with wealth managers was completed in December. So the top two drivers here are client demand in first place and risk management in second. Other drivers include top leadership commitment and also the desire to generate alpha. If we just look at the top two, so client demand, I already mentioned that 2/3 of clients have said that ESG is either very important or their top priority. Now, interestingly, this is across the board. So this is regardless of client segment, age, or investable asset. Now, the main challenge with risk management was identified as integrating ESG into a risk management framework. Now, what does this mean? This looks at things like suitability, portfolio management, portfolio monitoring, and making sure that's integrated into a framework. And we'll also touch on this a bit later. Next slide, please. Okay, let's have a look at the client's perspective. A few things to highlight from this slide. I think firstly, the overriding sentiment of the client is that they want their investment management to align with their values. They want to be doing good while doing well. The majority of clients would consider firms offering ESG highly versus others. For example, 2/3 of millennials would actively choose a wealth manager based on their ESG offering. So first point here, I mean, ESG could be very disruptive for our industry, where there's been traditionally a very sticky client base. The second main point here is that clients want to see a rich, on-demand digital experience. So what do I mean by this? They want to be able to access their portfolio on demand. They want to be able to see it on their mobile when they want to. They want tailored ESG reporting, much more personalized. They want to be able to see, for example, ESG scores and their carbon footprint. And not just the carbon footprint, but imagine being able to see the impact that your portfolio is having on the environment. So, for example, the carbon savings of your portfolio resulted in 20 less cars on the roads for a year, or resulted in 1,000 trees being built, or the equivalent, being planted, or the equivalent. You know, these are real differentiators for clients, and firms will have to get this right. And next slide, please. So what were the areas that needed the greatest change? And again, this is from the wealth manager's perspective. Data quality was one, and there's two sides to this. First, there's the actual accuracy of ESG data, because firms want to avoid greenwashing. And then secondly, there's the actual practical challenge of having to integrate data providers for ESG in what is often already legacy kind of spaghetti architecture. Then we have points which are more on the risk management framework. So we've got client profiling, suitability and reporting, and we've got portfolio management and monitoring. Next slide, please. Thank you. Okay, so what could or what should an ESG solution include? Now, I'm using Objectway's Eximius solution as my example. And I'm happy to say that it actually covers the areas that need greatest change, and also has some other features and benefits. And I'll go through a few of them. For example, Eximius handles multiple data sources for instrument scoring at E, S, and G level. Now, this gives the wealth management firm peace of mind in terms of, and flexibility in terms of data providers. But there's also a data quality service layer at the back, which ensures data consistency, quality, and also enriches data for missing sets through rules. So again, peace of mind in terms of consistency of data, which is a major issue for the wealth management firm. Eximius takes in client preferences and has real-time monitoring. So for example, you can look at ESG exposure, ESG momentum, and also rebalance. I mean, this ensures that client preferences are monitored and acted on promptly. And there's also analytics that firms will need to do. So for example, in Eximius, there's a risk engine, and it allows you to do what-if impact. So if you're an investment manager, you'll be able to look at the impact of ESG changes on risk, return, and yield, and share these with your clients via the portal, for example, via secure messaging or a video chat before changes are made. And then there's reporting, which we've already mentioned is a real differentiator for firms. Internal reports or reports to the regulator, such as TCFD reports, which are going to become mandatory as per the Green Finance Strategy, or reporting to end clients via the digital portal. These are essential. They've been highlighted by both the speakers before me. Next slide, please. Okay, so what does this look like? This is very high level architecture. And I think the main point I'll make from this slide is that you have suitability, portfolio management, risk analytics, and a data quality layer all in one platform. This will provide a seamless experience for wealth managers and also should have a positive impact on portfolio management and reporting, which obviously impacts the client. Next slide, please. Okay, I would have loved to have shown you a demonstration of Exemius, but there's not enough time. So I've taken just one screenshot, and I know you probably can't read the detail, so I'll briefly explain it. So what we've got here is a dashboard, and it's a dashboard of risk alerts. And on the left, or the donut you see in turquoise, you can see that the greatest alerts are in product governance in terms of categories. On the right of this, you have the instances of alerts. And on the far right, the donut shows the instance severity. So in this case, the majority are low, but there are some medium and high level ones here. Now, why am I showing you this? Well, different users will need different information, and they'll need it at different levels as well. And this is what you get from Exemius. I mean, the information can be changed per user. So investment managers will have a different view to a CIO, to a COO, CEO, etc. It allows you just to see to prioritize what you need to see quickly and action it promptly. And obviously, you can drill down into detail in the other screen. Next slide, please. Okay, so main takeaways. Client demand and mitigating risks are the two top drivers of ESG. Clients want a rich digital experience. So this means portfolio access on demand and tailored ESG report. These are seen as differentiators for clients, so they can be differentiators for firms as well. An integrated solution that is ESG ready will improve the client experience, increase engagement, and also improve risk management. And I think firms that are able to deliver this change digitally will be the winners, and firms that don't will lose clients. Next slide, please. Okay, next steps. I'd like you to consider two next steps as a result of the forum today, as a result of the webinar today. The first is an ESG forum for wealth managers. I'm really happy to announce today that Objectway and Compeer will be hosting an ESG forum for wealth managers sometime in May. The objective of this is for us to get together and discuss challenges, trends, and best practice in the industry. And there'll be some more details coming out to you from Compeer, but if you want to get in touch with me as well, feel free to. The only caveat is spaces will be limited because first forum will be online, and we want to make sure that everyone has a say. The second next step is an invitation for any wealth managers who are interested to attend a demonstration of Exemius. It's a powerful solution, and if you want to take a look, or if you want to use it to benchmark against what you already have, or maybe even provide food for thought for what you might want, then please get in touch. Next slide, please.
Thank you very much, Tarek. I think that gives you a good view of what Objectway can offer from a technology perspective. And again, Tarek, thank you very much for your sponsorship of today's event. Right, we're now going to do the panel session, and I'd like to introduce our panelists. So can we show the slide? Thank you very much. And very shortly, I'm going to ask each of these august individuals to introduce themselves. So as you can see, we've got David Howard from Rathbones, Glenn from Murphy from Stonegate Fleming, and we've already met Tim. So David, would you like to introduce yourself, please?
Yes, good afternoon, ladies and gentlemen. My name is David Howard. I'm the Head of Client Service and Proposition at Rathbones. I've been working in the industry for over 30 years. Previously to Rathbones, I was at Brewing Dolphin, and prior to that, I was at Williams to Brough, which was absorbed by Investec. At the moment, in terms of ESG, I'm very much involved with the development of our proposition on ESG. And in particular, the interest around the regulations impacting us in terms of our proposition and actually how we're going to deal with clients. So I have a very interested bent towards ESG and sustainable investing in our industry. Thank you.
Thank you very much, David. Glenn, would you like to introduce yourself, please?
Thank you, Jason. Glenn Murphy, Chief Operating Officer at Stonehage Fleming on the investment management side. Very much 20 years plus experience within the industry, obviously working for Stonehage Fleming, but prior to this, Cazenove Capital, Londoner Capital, and also Rathbones as well. Very much my focus on ESG is actually around our investment management side. The investment management part of our business is currently at just shy of $19 billion AUM. And we offer, obviously, to ultra high net worth clients who tend to be either private clients or family parts of family trusts, a wide variety of services, which includes funds and individual investments, private capital, direct investments, and also wealth planning services. Thank you.
Thank you, Glenn. And I know, Tim, you've introduced yourself already, but is there anything else you want to add to that?
No, very happy to be back for the panel.
Okay, so shall we get cracking? So we've got quite a lot of questions, and we'll get through those that time allows. So I'm going to kick off with the first question, which is, do you think ESG will change clients' behaviour? I'm going to offer that to David to start with, please. Sorry, I called you hot, David.
Yeah, no. The unmute didn't seem to work. Do I think it's going to change client behaviour? Yes, and personally, I think more than people perhaps think. I think we're facing unprecedented times. We have got a big change in society. We've got climate change affecting the world, and actually everybody sees it on the news every day. Forest fires in Australia, in America, tidal waves, etc. So I think it's very much at people's hearts that the environment and climate change are having a real impact on the world in which we live in. I think it obviously goes beyond climate change. It goes to social issues. It goes to equality, diversity. And I think we've all seen a significant shift in society's attitude towards these things over the last 5 to 10 years. So do I think ESG is going to change people's behaviours? Yes, I think very much so. If you went and asked somebody about their views on a particular issue, you would get a response and they would resonate with that. But if you actually said to somebody, have you got any ESG concerns? I'm not sure most people would actually understand what ESG means to them. So there's an educational barrier which we've got to get over. So do I think it's going to change the behaviours? Yes, I think they're going to be more demanding of us. Particularly, we see that with perhaps the more informed type of clients, such as charities. They're incredibly demanding. They've been on the front foot on this for several years, and they really are holding our feet to the fire, asking for reporting, detailed analysis, and questioning why we're holding certain types of investment in portfolios. That's starting to filter down through the high net wealth, the ultra high net worth individuals, and we see that trend continuing down to your average investor. So do we think it's going to change behaviours? Yes, I do.
Thank you very much, David. And the same question to Glenn. Do you think ESG is going to change clients' behaviours?
I'd certainly say so, and I agree with everything David's added there. I think behavioural change does take some time. Obviously, the journey started many years ago on the ESG side. It's going to pick up pace. I think the new regulations that are coming through, especially SFDR, will be natural prompts for clients to consider ESG offerings. I think the landscape has changed, so there is a lot more opportunities out there for clients to have exposure to ESG. All of this puts more into the offerings, if you like, for clients to receive. I think there's one additional factor. Obviously, behaviours take time to change, and there's lots of reasons that they will change. The world around us, obviously the issues of the day, and of course, what's on the agenda will encourage that behavioural change. But after a period of time, I think it's the next gen that are really going to force additional support for ESG and behavioural change in the industry itself and to what they receive. And it's that next gen through education, through additional advice, through support and the offerings available that is really going to see that ESG adoption really take off. We've only just started. Obviously, I think we've all seen the statistics, the new inflows. Some people suggest there's almost like a bubble within ESG at the moment. We know it's going to gather pace. It's only going to increase. But I think it's the next gen that will really carry it through. Thank you.
Thank you, Glenn. And same question to Tim.
Thank you, and a lot of very, very good points made by the first two speakers. And I think it won't be one way. ESG will change customer behaviour, and customer behaviour will change ESG investing, and to a certain extent, it will be the most powerful driver. And I think the really critical stage, and I hinted at this in my presentation, will be when we move on from climate. Because climate is straightforward. You can calculate the amount of carbon that a particular investment provides. Looking at wider ethical concerns, you get into a much more complex debate, and not just things like, well, how do people feel about things like alcohol or arms manufacturers, but really, incredibly thorny debates. Right now, if someone had exposure to Hong Kong, Myanmar, with world events, Israel, people will see both sides of these debates. And unless you know your client, you will not know what their personal ethical beliefs mean for ESG investing. And so that client behavior, that client demand will have a huge impact on the next stage when we move beyond carbon and climate.
Thank you very much. I think that's some really good points there. And that means that your investment management gets very granular, because different individuals will have different perceptions as to those various items. Okay, so the next question is, how do you manage the trade-off between performance and sustainable investing, or can you do both? And I'm going to ask Glenn to start on that one, please.
It's an interesting question, because, of course, it returns to that premise that ESG is underperforming or it won't perform at all. That, I think, has a lot of history. I think back probably a decade ago, when it started on its journey, people looked at the performance over such a poor, small track record and time, and then made their own conclusions. Of course, now we see there is so much more in the marketplace. We also see people get a little bit more savvy around the expectations on benchmarks and how they're composed. And of course, we're seeing benchmark regulation come forward to actually build out an offering so that performance can be measured appropriately. So rather than ESG obviously going against, let's say, an S&P benchmark, it's going to have a real peer alternative to go against, which helps understand the positive, if you like, the alpha on there as well. So overall, I think that it shouldn't necessarily be the case, and I think it's a historical question that's there. The performance will be very strong around ESG, but obviously it has to have the right benchmark. It has to have the right factors to be put against. Of course, thinking about this also in terms of the client, if you're looking at the level of risk associated with ESG, it was very well pointed out by Tim in his presentation, is those, if it's over a longer period of time, therefore, if the client is in for the longer term, they could actually have a lot more assurance rather than for the short term. And risk obviously associates potentially also to the reward. So ESG is not akin to Bitcoin, for example, where the risk is extreme, the risk is obviously more well managed.
Thank you very much, Glenn. And the same question to Tim. So that was how do you manage the trade-off between performance and sustain? Try not to muff my words now. Sustainable investing, or can you do both?
One thing that I think is important, and I completely agree with the points that Glenn makes, and I think the time horizon is critical, because if you believe the UK, European, and the current US government, the new US president, they are going to make sure that firms that are polluting do not do well. The 2050 net neutral target is stretching, and I think at the moment people haven't quite realized what significant changes to our economy are necessary to meet that. And so if you're looking at those sorts of time horizons, I would say actually there is a real risk to an investment that isn't ESG compliant. The other thing that I think is important to remember is not all ESG is equal. I imagine in the coming years, some of the best performing stocks, best performing investments you can make will be ESG compliant. I mean, if you bought Tesla early on, you're going to be feeling very pleased with yourself about now. And there are very few companies that can meet that exceed that performance. But there will also be incredibly poor performance. And I think any investor or any investment manager that just looks at the environmental sustainability rather than the wider business performance is going to get caught out. And so there will be choices between sustainable investments as well as between sustainable and others. And I think it's absolutely the case that while there may be individual investment decisions where you are having to sacrifice alpha, having to sacrifice performance for sustainability, there will be top tier sustainable investments, and making the right investment decisions within that sustainable that range of sustainable investments is going to be what makes the far bigger difference to most customers.
Thank you very much, Tim. And the same question to David.
Yes, I'd echo pretty much everything that's been said before, unsurprisingly. In terms of the performance, I don't think that there is a trade-off. I agree with Glenn. Historically, perhaps, but we see, particularly from our specialist ESI investing, their performance is very good and stacks up very well compared to our more traditional investment managers. So I don't think necessarily there is a compromise to be had here. I think there may be some discussions around the particular journey that somebody might make, in that the destinations may be the same, but really some of the volatility perhaps, or some of the timelines associated with it may vary slightly. I think the other thing to highlight is about sustainable investing. It's not, have I got a sustainable portfolio or not? There are all sorts of flavors within it. And individual clients will actually have their own personal values, which we'll have to respond to. And some of those values, depending on what they are, will actually have a direct influence on the universe of investments that one can choose from. So clearly, we all know that if you have a more restricted investment universe, less choice, by definition, there may be opportunities which you'll miss out on. But overall, I think as a matter of principle, just because I've got an ESG portfolio or a sustainable portfolio doesn't mean I'm going to be sacrificing performance. Thank you.
Thank you, David. Interestingly, so I think that's reflected a common maybe misconception that just because you're invested in environmentally friendly investments, your performance takes a hit as a result. I think that recent experience shows that's not the case. Okay, so our next question is, do you see ESG as a differentiator between firms? And I'm going to start with Tim, please.
Yes, I think it very much will be, and not just in terms of performance. I think the two really critical metrics that will set firms that offer ESG apart is communication and trust. So, and if you have clients and customers that are looking for ESG investments, they want to be absolutely sure that they are getting what they say they do. You may remember there was an issue a few months ago where a pension consolidator's ESG fund was found to have investments that members felt were not consistent with that remit, and it was a huge reputational hit for them because they had not met that requirement. It damaged trust. So those that are able to meet the requirements of their customers and communicate that clearly and consistently, I think will be real winners in this. If you do it poorly, if you muddle, or if you greenwash, you will get caught out. And in the end, that will be something that damages your business in the longer term.
Thank you, Tim. And the same question to David. Do clients see ESG as a differentiator between firms?
Well, we certainly think so. We've been operating in the ESG, ESI space for for over 20 years through a specialist division known as Rathbones Greenbank. And so we've been investing in this particular space for a long time and are committed to it. I think one of the things that we have to look at is our own corporate values and our own corporate purpose. And those particular points, I think, are key things that clients want to look at. They want to see whether or not your corporate values align to their values and effectively start to build that trust, which Tim was referring to. At the end of the day, I mean, the relationship between a wealth manager and their underlying client is one that is fundamentally built on trust. And it's very difficult to trust people who don't share the same values as you. So I think one of the key things is going to be positioning yourself as a firm, setting out your stall. Why are we here? What's our purpose? Is it to line our pockets? Is it to do some social good? Is it to benefit all our stakeholders? However you choose to set your stall out, that's going to be very, very important in differentiating yourself from the pack. Because at the end of the day, we can't have every client. We're all going to appeal to different types of people. And so therefore, it's very important to make sure you appeal to the right people very well to ensure they become very sticky and you attract those sorts of people. The markets are very large and there are plenty of clients out there. You just need to make sure you mine your particular scene particularly deeply. So overall, is it a differentiator? Absolutely. And we're doing our bit to make sure that we align our values, or make very clear, I should say, our values, to allow our clients to recognize what they are and feel comfortable that their values are aligned to ours. Thank you.
Thank you, David. And Glenn, same question.
And in many respects, following on with the same point, which is values, it's so core to the differentiation in this area because ESG is seen as very values driven, especially from a client's perspective. I think it's going to be a challenge for some industry groups to change, for some businesses to adapt to that, to be able to show their corporate values are aligned to the expectations of the clients. And obviously, I'm thinking of the much larger businesses and organizations which have so many variety of business lines that it can be difficult to change to have those. But this is really a shout out to really those small boutiques that for many years actually now have aligned their corporate values with ESG values and have brought those solutions to the marketplace. And they've shown actually that they're very much viable. They're offering a client service which actually probably up to a year or so ago was unmatched in the industry. And it really is a great area for those boutiques to actually exist in, because the alignment of those values and of course the product offerings to their clients is so joined up. That from my perspective, his values is key, and it's wonderful to hear David echo that as well as Tim.
Thank you very much, Glenn. I think that reinforces the response to the Compeer survey about commercial opportunity from ESG. I think we've got time for probably one or two more questions. Next one I'm going to ask is, how confident are you in the accuracy of your and consistency of your ESG data? So let's start with David on that one, please.
Very good question. I think it's fair to say that ESG data, sustainable data, however you want to describe it, is something that's evolving. Obviously, a lot of it relies on voluntary disclosures or disclosures by companies to make sure they do it correctly. And we ourselves as a listed company are getting to grips with increased disclosures, climate statements, etc., that we have to make in our annual reports. So clearly, we will be evolving and developing as our own company is around the quality of that data disclosure. With data vendors, obviously data vendors will be harvesting that data. They may be adding their own personal views here and there. And obviously that subjectivity combined with the objectivity of data, which might itself have some flaws, does actually mean that the quality of data overall, the consistency of the data for the marketplace is something that leaves a lot to be desired as of today. It doesn't mean that we're not going to get there. It just means that we as an industry are going to have to improve. And those data vendors are working very hard to provide a service to the likes of us and other firms. but you can't rely just on one vendor, we think. We think we've got to look at more than one vendor, plus we've also got to potentially add our own overlay on top of that from time to time. If you're fortunate enough to have your own research function, they're going to be working very hard to consider all of these ESG factors alongside any stock recommendation that comes out of them. So from that perspective, accuracy and consistency of data, am I confident? I'm confident insofar as we're doing as much as we can today. But do I think it's right? No. Do I think it could be better? Absolutely. But I think it's a question that time will take care of it as we all become more comfortable with the data. Thank you.
Thank you, David. So Glenn, well, do you think, or how confident are you in the accuracy and consistency of the ESG data you have?
I think in terms of the data we have, it's right for the point in time that we are at, but it is still far to go. The journey for us, both as an industry and obviously organisations, is that they do rely on the third-party data providers to enhance that level of quality and accuracy. And in turn, obviously, the corporates, the companies that are publishing their own scorings, their own analytics and KPIs, they need to demonstrate that. And more of the regulation to come is going to encourage that on a voluntary basis for some under a certain size, on a mandatory basis for others. That journey started a decade ago. Obviously, we're all aware of aspects in terms of carbon exposures, all of the initiatives back at that time, and how much that has now improved year on year. So we know there is still much further to go. But the data providers have certainly responded. I think they recognise now there is much more of a commercial interest on the ESG offerings to be able to ensure they are enhancing their service to their clients, and they are working on that, and that's demonstrable. I think Tariq highlighted the examples of the platforms and the solutions that they're bringing to the market as well for this purpose. It's quite interesting, the journey, though, a lot of these data providers have gone through, because I remember probably a decade ago, you might be lucky just to find one good, solid data provider that could provide you with a small partial amount of ESG information. And it was always generally on the G, the governance, because that was the easy stuff to scrape, to bring to the table. And so you could actually carry out research on stocks. You could build your portfolio on that basis. But now the ESG is covered. It covers the E and it's covering the S. It's all about the data, and there's more to come, and that's the expectation. So it's only going to grow, and the benefit will be the end clients, because to touch on a little bit about the client reporting aspect as well that Harry raised earlier, clients are going to ask about, yes, do they have 30.5 in their valuation, and that's representative of the total valuation, but they're going to want to know about what is the carbon footprint that they've worked hard to. Some may even ask, how many trees have they saved? What has been the benefit of their investment? That's the type of reporting that eventually we want to be able to do for our clients. And then it's all about working backwards to get in that data.
Thank you very much, Glenn. And Tim, I know you don't represent a firm, but do you have a view sort of for the industry as a whole as to regard data quality?
Yeah, and I think this is an area where we've got to get the regulation absolutely right and the taxonomy absolutely right. I mean, unless we have very clear and agreed terminology, it's going to be very difficult to make sure the data is of the right quality and consistency. And I think particularly for international firms, to ensure this is globally as consistent as possible is going to be incredibly important, and because otherwise you will be comparing apples and oranges. So if we can get that regulatory clarity, there is then a key driver for improving data quality across the board.
Thank you very much, Tim. I think that that's probably our lot for questions, because we're now at 5:10. So thank you very much to the panelists. And while I've still got some interesting questions, I think we need to move on. So can I have my next slide, please? So I hope you've all enjoyed and found that very useful introduction or information regarding ESG. Please, if you've got any further questions, please feel free to contact any of the people here, either myself or Ian from Parkwell, Tim from PIMFA, or Tarek from Objectway. As I said earlier on, these slides are going to be available to you on the Compeer website, so you'll be able to access our contact details there. I also like to take this opportunity to thank Objectway for their sponsorship, and indeed all the speakers this afternoon. So Tim on his piece from PIMFA, Ian from Parkwell, Tarek from Objectway, and then the members of the panel, David, Glenn, and Tim. Can I have the next slide, please? So just to wrap up, I hope to see many of you again at these future Compeer webinars. So next week we have the Compeer RegTech 21, which is going to cover disrupting the status quo of compliance. We then have a joint one, which is about HR type issues and how to make your firm attractive for millennials. And then we have the regular wealth tech event and talking about next normal, how we're going to move on from after the COVID-19 thing. And again, the dates for these will be available in the slide packs that will be on the website. Can I have the next slide, please? Or is that the last slide?
Maybe that is your final slide, Jason.
Well, okay, well, thank you very much for your attendance today. And I'm then going to close this webinar.